Hello, welcome to this edition of Questioning the Manager. We have Tim Stevenson, Fund Manager of Henderson EuroTrust. Now this is a European ex-UK equity portfolio, and it invests in what Tim refers to as quality growth companies. That's established companies, established brands that are growing their earnings at an above average market rate. Tim, welcome to Questioning the Manager. Okay, start with Trump. We've seen relatively consensus reflationary trades, that's investors placing trades in the expectation of inflation and growth coming back into the system. So how has this affected your quality growth portfolio?
Yeah, I mean, it's clearly more difficult. I think it's, the fact of the matter is that what's actually been going on in the markets is an acceptance that inflation is coming back into the system and interest rates have finally, at least for now, stopped going down. You are going to see interest rates going up a bit. And since a lot of those sort of good quality growth names had been priced very much on very low interest rates and moved to very big premiums, and we accepted that, and we knew that was the case, then any alternative immediately gets a big following. I think you've then got to sort of move on from that and sort of say, well, how far does it go? How much reflation actually is happening? I think you've also got to distinguish between how much reflation is potentially happening in the United States and sort of to a lesser extent the UK compared with Europe, which is certainly reflating. The governments are much stronger, the economic situation, the finances of governments is much better, but actually Europe's not going to turn its back on all the austerity and everything else. They will just run their economy properly like they have been. And you will not see huge, great government spending plans, but you will see a kind of sort of cyclical fiscal easing by virtue of the fact that tax revenue is going up for governments. So actually, you're seeing reflation everywhere, and it's benefited a lot of our stocks too. So yes, we're behind the index, but not a huge amount.
Some positives for European companies. They seem finally to be growing their profitability. So why is this, and do you think it will continue?
Yeah, there's certainly a big, much higher level of optimism in Europe at the moment than there has been for quite some time. I think for about 4 or 5 years, we've started off the year saying there's going to be 10 to 12% earnings growth, and after 2 or 3 months that's become 6, and then it fades away to nothing, and that's the kind of environment we've been in for the last 5 or 6 years. So far this year, we started off with around about 8 or 9%, and that growth rate looks like it is both sticking and actually possibly expanding a bit. And certainly the company meetings we've had have been quite optimistic. The companies are quite positive for this year. Consumer demand's picking up. Tax levels are coming down in a lot of countries as well. The cost of borrowing money is much lower, so their financing cost is lower. And demand is picking up by virtue of the fact that the euro is that much weaker, so export demand is picking up too. So actually there's every reason why Europe this year will actually finally see that earnings growth, which we've been waiting for quite some time.
Politics in Europe is going to be pretty noisy this year. We've got upcoming Dutch, French and German elections. So how do you think markets will react to this?
Yeah, it is noisy. It is a very uncertain time. It's very risky to say anything after last year's events when everybody thought something would happen and then the opposite happened to what they expected. I think the Dutch election, first of all, will see the right wing do well, but I do not think that the far right will be forming a government. I'm pretty confident of that. The big one really is France, and I think people forget that it is a 2-stage process. So after the first round, it's only the first top 2 who go through to the second round. So even if the far right under Le Pen do get, say, 25% of the vote in the first round, you have to ask yourself the question as to the 75% that did not vote for her in the first round, are they likely to vote for her in the second round? I think that's highly unlikely. So the odds are very heavily stacked against a Le Pen victory, which I frankly think is just as well, because I think it would cause huge chaos, and I think it'd be very complacent for anyone just to think that this is just another bunch of UKIP nutters or something, because that's not the case. These guys are seriously even worse than UKIP is.
Okay, finally, Tim, some investors can get concerned when they see portfolio turnover or churn, the amount that fund managers are buying and selling stocks within a portfolio, because they believe it can add lots of extra costs. So what is the portfolio churn like in Henderson EuroTrust?
The turnover has been running at around about 25%. It has picked up a little bit over the last few months. Clearly we've had to change. We've put more banks into the portfolio to reflect the fact that we're into a sort of positive interest rate environment for the banks. We've had to sort of put in more, and we feel it's right to put in more sort of cyclically related stocks. Turnover is now up to around about 35%. I think, to be honest, I think there's too much focus on this turnover thing. We have to do what is right. At the end of the day, we're not turning the fund over for the sake of turning it over. We're trying to do our very best in terms of finding the best companies which we want to participate in over the long term. So yes, we keep an eye on turnover, but I don't get too spooked. If I have to do something, I don't look at it and think, well, this is going to cost me 5 bips or something just to do this. We've got to get on and do it. You make up that more than that 5 bips much more quickly in getting a decision right.
Tim Stevenson, thank you.
Thank you.